Okay. As I said, I'm Allison Barrett, and I welcome all of you. At GCEC, we like to start each of our meetings with a land acknowledgement, just so that we level set and honor those who came before us. The Greater Columbus Arts Council collectively acknowledges that the land we are positioned on is the traditional, ancestral, and contemporary lands of Indigenous people. We reside on land that was cared for and called home by the Kaskaskia, Shawendez, Tula, Shawnee, and Miamia people and their ancestors. The land was ceded to the United States by Session 11, which is also known as the Treaty of Greenville, in 1795. By offering this land acknowledgement, we affirm tribal sovereignty and will work to be accountable to American Indian peoples and nations. So thank you. So I'm going to turn it over to Elaine to dazzle us.
Well, thank you, Allison. Prepared to be dazzled, because talking about taxes is dazzling, in fact. I'm going to go ahead and share my screen, folks, so that you can see what I'm seeing. And now that I am screen sharing, that means I can no longer see your faces or the chat. So I'll ask Allison just to kind of keep an eye on the chat in case you're putting comments in there. But
Absolutely.
Also, if you want to just kind of shout out a question or interrupt me, please feel free to do that. We've got about 90 minutes together and a lot of tax content we can cover in 90 minutes. But I do want to make sure that questions you have or thoughts you have are being acknowledged so that we can make sure you're getting exactly what you need out of our time together. Our goal for the next 90 minutes or so is to make navigating this tax season a little bit easier for you. You are all creative individuals, which means you have some unique challenges when it comes to tracking everything for tax purposes and then also reporting everything. More specifically in our time, we're going to go over kind of a general tax landscape, mostly for federal tax purposes, but we'll touch on Ohio and Columbus as well. We'll identify ordinary and necessary business expenses. Those are your tax deductions if you're running a business. And we'll talk about record keeping systems so that you can either gather all the pieces from last year or get yourself a little bit more organized going forward. As Allison said, I'm Elaine. I use she, her pronouns, and I am based in Columbus, in Dublin, which as well is Kaskaskia and Hopewell Indigenous and Cultural Lands. And I have the great privilege of running a company called Minerva Financial Arts that works exclusively with creative individuals and organizations to help with the business side of creativity, which means this time of year, I talk a lot about taxes. And although I am talking about taxes and I am a CPA, I do have to remind you that all of this information is for educational purposes only and is not intended to be used as tax, legal, or accounting advice. But you probably knew that. So let's start by sort of answering this big question: how do federal income taxes work? And this is a simplified version of what the US tax system looks like for individuals. If you are a permanent resident, a dual citizen, or a US citizen, you are probably filing Form 1040. And this is a simplified, prettier version of what that form looks like, along with all this kind of key pieces of information. If you fall into a different category, maybe you are here on a student visa or you have a different status, you might have a slightly different form to file, or you might not have a filing obligation at all. So the IRS has some helpful questions and answers if you fall into a different category. But let's start by sort of addressing this sort of money in question, right? Because after you list all your human information on the tax form, your name and your social security number and your address and that kind of stuff, then we start reporting income that you got from all sorts of various different sources. And we know in the arts, you probably earn money from a lot of different things. And from your perspective, it might feel like you're doing the same type of work for different clients, groups, individuals, right? But it really matters from a tax perspective what type of income it is, because that tells you where it goes on your tax form And it also tells you what types of deductions you can or cannot claim. And it is totally your responsibility to track the different types of income, which I know is a big burden that is put on the individuals, but that's kind of how we roll in tax world in the United States. Most of the burden is shifted to the individuals to kind of figure out some of this stuff. So the first category of income, I call it W-2 income. These are wages, these are day job kind of payments, these are salary payments you receive. This is income you earn where you are an employee of someone else. So that someone else is paying you, hopefully on a somewhat regular basis, could be part-time or full-time. And every time they pay you, they are withholding taxes from your paycheck. That's very different than if you're a contractor, right? At the end of the year for your W-2 types of income, you will get a form W-2 from your employer, and they will tell you how much they paid you and also how much they withheld. Now, it's important to note that they are withholding a bunch of different types of taxes. So they are withholding your employment taxes. So that's your Social Security and your Medicare. And then they are also withholding federal, state, and probably local taxes as well. Now, they are only withholding 7.65% of what they're paying you for your Social Security and Medicare. Your employer is responsible for paying a matching amount, 7.65% out of their own pocket to cover your entire Social Security and Medicare obligations, right? So know that if you have a W-2 job, your employer is paying some of your taxes. That will not be true when you are earning income as a business owner or a freelancer or a gig worker. If you have W-2 income, that gets reported on the front of your Form 1040. It's the first line, and that's what most individuals in the United States have when they're earning income. The big thing to know about W-2 income is that you are not entitled to claim any deductions against that income. So that's why if you are working from home for your W-2 employer, you cannot deduct business use of your home, or you cannot deduct an extra charger you bought so you could work more efficiently or anything like that, right? You cannot deduct any expenses associated with your W-2 job. That is very different if you're earning other types of income. But remember, two things about W-2 jobs. Your employer is paying some of your taxes, and you may not claim any deductions against that income. It's also possible that you might have what I'll call just random income, right? Let's pretend you are a visual artist, but you also happen to play guitar, and a friend asks you if you'll play guitar one night once during the year, and they give you $300 as a thank you, right? I would call that random income, right? You're not in the business of being a performing artist. You are not regularly pursuing guitar gigs, right? This is just one little one-off thing, right? So if you're pursuing random types of things like that, the income gets reported as other income on Schedule 1, and it goes on the line that is called activity not engaged in for-profit income, which is maybe the worst sort of phrasing ever, but this just means you're doing something, you're getting paid for it, but you're not really trying to make a profit out of this money. There are not generally Social Security or Medicare taxes that are being paid on this type of income, but you also don't get any deductions against it either. If anyone has ever talked to you about whether or not you are running a business or if you are a hobbyist, this is the distinction they're talking about, right? Because if you are a hobbyist, all of your income is going to go on this line and you do not get any deductions associated with it. If you are running a business, though, you have a different situation. If you are running a business, you get to report your income on this line that says business income or loss, And you fill out an extra form. It's called Schedule C if you are a sole proprietor or the only owner of a limited liability company. And that's where you report all of the business income and also all of the business expenses that you are allowed to deduct from that business income, right? So if you are running a business, instead of having no deductions associated with that income, you may claim all of the ordinary and necessary business expenses that are deductible. That's generally a good thing because in my example, let's pretend that person who played guitar wasn't just randomly doing it once for a friend. Let's say they were actively pursuing performing arts work. That means strings, guitar maintenance, oils, travel to and from gigs, different equipment they might need, all of those expenses that are associated with running the business all of a sudden become deductible to that business owner, right? So it's generally a good thing to be running a business, assuming you kind of meet that criteria. I will also point out here, and this is often something that surprises folks, if you are running a business, you do have to pay those employment taxes. And if you are running your own business, you have to pay the entirety of the tax. That's 15.3% in Social Security and Medicare taxes, right? Now, that's a good thing because you're putting that towards your own future, which is very nice of you, right? But that is often a tax that surprises people because they're not always expecting it. In addition to those self-employment taxes, that 15.3%, you also still have to pay federal, state, and local taxes as well. So know that if you are running a business, there are great things about that, and you might feel like you are paying an excessively high amount in taxes. Here's sort of what happens geographically on that tax form when you're running a business. Unlike your W-2 income that gets reported on this main Form 1040, all of your business income and deductions get reported on these different schedules. As I mentioned, if you're a sole proprietor or a single member LLC, you're probably filing Schedule C. If you have an LLC with other people, or you have a partnership, or maybe you even have an S corporation, you're probably filing Schedule E. You're basically reporting the same type of information. It's just going on a slightly different form. So if you are getting grants or awards associated with your business, if you are getting any sort of 1099s because you're doing freelance work for companies and they are sending you a 1099, or if you are selling work directly to clients, or you are selling merchandise maybe, or you are teaching maybe music lessons out of your home studio or something like that. All of those different types of income are probably associated with the business you are running. And you'll notice not all of them have sort of forms associated with them. If you're getting a grant and it's more than $600, or you're doing freelance work more than $600, you're probably getting a 1099. But if you are selling work at the art festival over the summer, whoever is buying your work is not going to give you a 1099. It's your responsibility to track that income yourself, because you are your own books and records if you are running a business, right? That means you're approaching this activity professionally and you are keeping track of income that's coming in and expenses that are going out, right? So you might have income even if there is no paperwork that you get at the end of the year, right? Which is okay, right? You are tracking all of this yourself, and it is perfectly fine to create your own books and records. So I want to take a moment here just to go a smidge deeper into whether or not the IRS thinks you will be running a business, because that sort of hobby versus professional distinction can come up for a lot of different individuals. And sometimes it's one of the hardest questions you can answer, especially when we know in the arts, your income and expenses are sometimes not predictable and your business isn't always profitable. So,
Hey, Elaine,
yes, go ahead,
can I
Allison.
interrupt you? We have a question in the chat
Oh, good.
from Evan. When should you start to file your business taxes? Meaning, if you got your LLC in the middle of the year, do you start that year or the next full year?
You start that year. And Evan, that's a great question. So let's pretend, Evan, you formed your LLC in like June or July. What you'll want to do is go ahead this year, as you're filing your federal tax return, you're going to go ahead and report any income you had after you started the LLC and all those expenses. So you'll go ahead and report it as sort of a partial year business. So yeah, great question. Any other questions, Allison? I should probably pause and check in with you just to kind of see if things are coming in.
Nope, no other questions right now.
Okay, sounds good. So the most important thing you can do to demonstrate that you are in fact running a business is to approach the activity professionally and keep books and records. The IRS loves books and records. So this is definitely something you will want to maintain in case the IRS ever asks to see them or asks if you are in fact running a business or if you are a hobbyist, because hobbyists don't necessarily keep books and records for their hobby, right? Keeping books and records is an indicator that you are in fact running a business. So let's talk a little bit more about what books and records are or what they look like. The IRS says you can use any system suited to your needs that shows your income and expenses. That means it can be a very analog sort of paper-based system, which is perfectly fine, or it can be a totally and completely digital system, which is also perfectly fine. Or it can be kind of somewhere in between. So your job is to know how you work best and know what kind of system will work for you, and then build your system to suit you rather than trying to sort of contort yourself into using a system that doesn't necessarily make sense for you. So for all of these transactions that you have, any money in, so anytime you are getting paid, or any money out, anytime you are paying others or paying for expenses or buying supplies or anything like that, we want to make sure that you are capturing 4 key pieces of information in your system or in your books and records. You need to know the date of the transaction, the counterparty, so who did you pay or who paid you, and the amount of the transaction. And those first 3 pieces of information you can get from your receipt or your credit card statement or your bank statement. But you have to also proactively supply the business purpose of the transaction. So that means if I am at the art festival and I buy a painting from someone and I give that person $1,000, in that person's system, they would mark the date of the sale. They would say, my name, I'm the person, the client who bought the painting. The amount was $1,000. And the business purpose was sale of painting 4596, titled whatever it was titled, right? So you are capturing all of the information from the transaction. Similarly, maybe after this, Allison and I will decide to go out to dinner afterwards. And maybe I say, Allison, I'm going to go ahead and buy dinner. Would you share some feedback on the tax workshop with me, right? So the date would be February 28th. The counterparty is wherever we decide to go to dinner, somewhere very nice. The amount is however much we spend on the dinner. And then the business purpose is dinner with Allison to discuss feedback on tax workshop, right? So I'm capturing information about the transaction in order to demonstrate that it is not necessarily just a dinner with friends. It is a dinner where we're talking about something related to the business. And that's one way we distinguish personal expenses, which are not deductible, from business expenses, which generally are deductible. So there are a couple ways to keep track of this information. Sort of the quickest, easiest, cheapest way to do it, not counting just a big envelope of receipts, is using some sort of database system. So I'm talking like Excel or Google Sheets or Numbers if you're a Mac user, right? And what you want to do is basically use that database to track information about your expenses and your income. If you have bank accounts, you can export that data so that you don't have to type everything into your database system. You can sort of dump the data into Excel or Google Sheets, which is nice and saves you some time. But what you really want to do is make sure you're capturing this information. And this is how I would set up your database system if you're building one from scratch. There are also a bunch of different templates you can download. Some are better than others, so just play around and see what works for you. But in this particular setup, you'll see we're capturing the date, the counterparty, the amount, and the business purpose of every transaction. Now, here's the extra little piece that you're not required to have, but I think is a really good idea. If you add this column that says category, you're basically telling Excel or Google Sheets where this expense is going to go on your tax form. And that means at the end of the year or quarterly or however often you're going to look at these numbers, you can either sort the data, so it makes it really easy to see what the total business meals expense you had for the year was. Or if you're feeling really fancy, you can write some formulas that sort of automatically sum up all of this information so that you can kind of generate a report for yourself. But if you're saying to me, Elaine, I hate Excel, I hate Google Sheets, nothing you said just makes sense, I have good news. There are other software options that will do some of this automation for you. Now, in general, they are not free. There are some free versions of some of these, and Mint, for example, is entirely free. But as with everything that is free, if you are not paying for something, often you are the product. So just be aware that Mint and others are generally selling your information. Now, if you're totally comfortable with that because Google knows everything about you anyway, go nuts. But if that's something that makes you a little less comfortable, you might want to explore a system that you pay for that also protects your data a little bit better. QuickBooks tends to be kind of the gold standard from an accounting perspective, but it's not very intuitive. I will say Wave is a system that people love, like really, really love. It has this remarkably strong cult following online. It is much more intuitive to use. It's prettier. It works generally very well, and oftentimes people prefer it to QuickBooks. Wave also has a free version as well. And Xero and FreshBooks are also really great. All of these systems are going to be capturing the information you need. And if you link them to your bank accounts, then it's easy to kind of sort things. The software will learn that every time there's an expense from a restaurant, it will categorize it as a business meal, right? And so over time, the record keeping process gets a little bit easier. But that's basically what you need to be capturing and a good way to do it. And you need to save all of this information for 7 years. There is a 6-year period called the statute of limitations that the IRS has to examine your tax return. The normal statute is 3 years, but it could be extended to 6 years. So that's why we just say, well, let's just plan on it being potentially up to 6 years. But that 6-year period doesn't start until the later of when you file your tax return or your tax return is due. So if you had a meal expense or you bought supplies in January of last year, your 6-year statute of limitations is going to start on April 18th of this year when your taxes are due. And then it's going to go all the way through April of 2029. So that's why we say hang on to everything for 7 years in case the IRS asks some questions. And it is possible that you have not saved every receipt, and it's fine, right? If you have not saved every receipt, it's not the end of the world. I would encourage you, though, to go ahead and do your best to save receipts, because in addition to the date, the amount, the counterparty, and the business purpose of every transaction, if the IRS wants to see the original receipt, they can certainly ask for it. That's really annoying, but it is possible. And you could see how it might make sense from their perspective, right? So Let's give you an example. Let's pretend you are an actor or a director or a playwright, and you are staging some sort of production. And for that production, you go to Target and you buy like a rug and a chair and a little house plant, and it's all going to sort of be on the stage, right? Your records might show purchase from Target for sort of performance supplies. But the IRS is going to say, wait a second, Target, you can get groceries there, you can get clothing. How do we know that you really bought these performance supplies there, right? In that case, it would be very helpful to show the receipt that shows, the rug, the chair, and the houseplant, and then maybe also have like an image of the performance where you could see the rug, the chair, and the houseplant and sort of match it all together, right? So generally speaking, save your receipts. If you get them emailed, just tag them in your inbox and then PDF them all at the end of the year, sort of in a big batch. If you get paper receipts, stick them in a big envelope and just hang on to them. And also just do your best, right? Because occasionally there are things that we just don't end up with receipts for, and it's not the end of the world, but do know the IRS would prefer that you save all of your receipts. I would also say, yes, you can wait until the very end of the year to do all of this. And it's probably a little bit healthier if you're maintaining your books and records over the course of the year, sort of in smaller batches or chunks. I like about 2 hours once a month or so. If you can create some sort of ritual around it that makes it slightly less awful to have to do, and it gives you kind of more timely information about the financial health of your business so that you can adjust something during the year if you need to. I will pause here. Allison, are there any questions that have come through, or does anyone have a question about saving receipts or record keeping systems or anything like that?
I'm not seeing any.
Okay. I'm going to keep going then. I hope that wasn't too depressing, right? Saving receipts is not the most interesting thing, but it is one of the most important things to demonstrate to the IRS that you are, in fact, running a business if they ask. The other things you can do to demonstrate that is spend enough time on the activity to make it profitable. In my example with the friend who played guitar once for like $300, you're not spending enough time on that to make that a profitable business, right? That was just like a one-time thing. We also could demonstrate that you have the knowledge needed to make the activity successful. There was a great court case a bunch of years ago where Susan Krill, a visual artist based in New York, was able to demonstrate that she did have the knowledge needed to make her art business successful because she had had some press coverage, she had had works included in catalogs and publications, she had had sort of museum acquisitions that were made, right? And she had kind of evidence of all of this stuff. It wasn't necessarily tax evidence, but it ended up serving her from a tax perspective because she was able to demonstrate that, yeah, she was a recognized artist in the field. She had evidence that she had the knowledge needed to make this art business successful. And then lastly, it's always helpful if you are in fact making money from your business. The IRS will assume that you are a business if you make money from it. But we also know that's not always possible. So if you are attempting to earn income, that can help as well. So if you are applying to shows or applying for different types of funding or sort of pursuing income, that evidence can be helpful if you have a bunch of years where you are not a profitable business. As I mentioned, if you make positive net income, so your income is bigger than your expenses in 3 out of every 5 years, the IRS will assume that you are in fact running a business. But we know that's not always possible in the arts, especially going through some pandemic craziness years, right? So if you find yourself not having met this income in 3 out of every 5 years test, it's not the end of the world, but that does mean that you will probably want to be showing evidence of some of these other things if the IRS asks to see it. So keep all of those things in mind. If you are running a business, and I imagine many of you are or are on the cusp of that simply because you are here tonight, you are probably looking at filling out Schedule C. And one of the first questions that comes up on Schedule C is this box B, where it says enter code from instructions. Now, if you open the instructions say, tell us what industry you are operating in. And the last 2 pages of the instructions have a list of all the industry classification codes. And in fact, if you formed a business in Ohio, right? So if maybe you formed an LLC or you registered your business, you may have already chosen one of these code numbers. And there's a good chance 711510 is the code you chose. I've put some other codes up here too, simply because there's a range of creative individuals served by GCAC, but independent artists, writers, and performers is pretty broad. So that covers a lot of the creative work you do. And when we're choosing a code, we generally try to choose the code that best captures what you are doing, right? So if you are a visual artist and you do some commissions and you sell some original work, and maybe you also sell derivative products like stickers or prints, or you license your work to be on tote bags, all of that falls under independent artist, writer, or performer. And I would even say if you're teaching workshops out of your studio, that probably falls under independent artist, writer, and performer as well, right? So these are pretty broad categories, recognizing that you can have a lot of different types of income underneath that. But if you start like a doggy daycare business on the side, that feels like a separate industry classification code. That feels like a separate Schedule C you would fill out for that type of business. So once you're running a business and once you know kind of what type of business it is, the next question we want to answer is what business expenses are deductible? And so when we're talking about deductible expenses, or sometimes we'll call them write-offs or deductions, all this means is that it is a business expense that you are permitted to use to reduce your taxable income. I had a meeting this morning with a musician who shared that he made about $40,000 last year. And he was like, why would I bother reporting my deductions? I don't know what that means. And I was like, I'm really glad you asked. So, musician, if you report $40,000 of business income, then you pay taxes on $40,000 worth of business income. But if you traveled, and he was a trombonist, so if you took care of your trombone and maybe you had to dry clean your tuxedo, right? All of a sudden, if those expenses added up to say $4,000, instead of paying taxes on $40,000, you report $40,000 and then you report your $4,000 of ordinary and necessary business expenses that are deductible. All of a sudden, your taxable income is $36,000 instead of the full 40. So that's why we're interested in understanding deductions and tracking them. And that is also why the IRS is interested in making sure that we are claiming reasonable deductions and not sort of trying to make personal expenses feel like business expenses. Because remember, personal expenses are generally not deductible, while business expenses are deductible if they are ordinary, which the IRS tells us means common and accepted in your industry. If they are necessary, which the IRS tells us means helpful and appropriate to your trade or business, and if they are effectively connected to your trade or business. That effectively connected piece, that's basically the business purpose that we were documenting earlier. That's why a meal between me and Allison where we talk business is deductible, whereas a meal, if we're just going out to catch up as friends, is not deductible, right? So this is sort of the general rule. And as you are tracking all of your expenses, whether or not they're deductible or not, you want to track all of what you view as your business expenses. And then at the end of the year, we can say, okay, are these ordinary and necessary? Are they effectively connected to the business? And are there any special rules we need to know about? So now I want to kind of move into some examples that often come up and some common sort of types of things that people often ask about. But if you have specific things you want to know about as well, drop them in the chat and then we'll go through all of them at the end.
I've
So,
got one real quick.
oh, perfect. Good.
Is the 15.3% Social Security and Medicare tax on the 40K or the 36K after deductions?
36K. Great question. Yeah. And it was only 36K because that was the example, right? So the 15.3% Social Security, Medicare, self-employment tax, that's on the net amount after business expenses. Great question. So some of those expenses may include car-related costs. So we have a whole line here on Schedule C called car and truck expenses. So if you are a baker and you buy a van that you use to sort of deliver pastries to very happy people all over Columbus, you might decide to deduct the entire cost of the van if you're only using it for your business. But that's not the only car and truck expense you might have. You might use your personal vehicle for business purposes, right? Not commuting to and from your main place of business, but maybe you drive to a festival, or maybe you drive to deliver work to someone who purchased something, or maybe you're driving to a gig, right? If you're a performing artist, those business miles that you are driving in your personal vehicle are deductible as well. Same thing for public transportation swipes or any type of other car and truck expenses that might come up. So I have some examples here of what this looks like. I mentioned driving your personal vehicle to and from an event, right? Usually we would not deduct gas, we would only deduct the mileage. And the way we do that is by using the standard mileage rate and multiplying it by the number of business miles driven. So for 2022, we had two different rates. You might remember in June, gas prices went crazy high along with inflation. So the IRS adjusted the business mileage rate in the middle of the year. So let's say this person drove their 10 miles in October, right? They would multiply 62.5 cents times 10 miles, and that would give them their business miles driven deduction. But that rate is meant to cover gas and maintenance and oil changes and filling up your tires with air in the winter. So we would not also deduct the cost of gas. We would just use the mileage rate. If you have tolls or parking expenses, that can go in there as well. But if you get a parking ticket because you let your parking meter expire, that parking ticket is not deductible, right? We don't incentivize illegal activities, right? So you can't deduct the parking ticket, and you wouldn't necessarily deduct the gas. You would instead take the mileage times the rate and then any additional costs you might have. So that's for sort of driving around town, right? Sort of local transportation, we might call it. But you also might find yourself traveling when you are away from what we would call your tax home, so where you live and where you do business. And if you are far enough away that it would generally require an overnight stay, that's when we call it travel expenses. So that means your airfare if you flew somewhere. It could be a train ticket if you're taking the train somewhere. It could be lodging while you are away from home. All of those travel-related costs are deductible if the primary purpose of the trip is business-related. So the examples here are if you're participating in an event several states away. So maybe you paid for airfare, you had to check some bags, and you paid to upgrade your seat on the plane. I would be comfortable deducting all of those things, right? Sometimes people say, wait, an upgrade, that feels fancy, right? I think it's okay, right? $45 to not be the last person on the plane is okay with me. That feels ordinary and necessary. Now, if you're chartering a private jet somewhere, we might have a slightly different conversation, right? But $45 to upgrade the seat on the plane seems fine. You might have lodging when you're at the destination. This is expensive lodging, but all those taxes get thrown in, right? So that would generally be deductible. And then while you are at the destination, you might also do some things, right? That's okay. This person visited the tallest building wherever they were just for fun, and they saw a cool exhibition. Now, I would not deduct the cost of visiting the tallest building. That doesn't really feel like there's a business purpose associated with it. You could convince me, right? I could be convinced that there is a business purpose and I could get comfortable with it. But I think paying to see an exhibition when you're seeing someone's work you admire, that feels deductible to me. It feels more like research, right? I wouldn't deduct it as a travel cost, but I would deduct it as part of sort of the research you were doing for your body of work. And if we're traveling, that means we are away from home, which brings up the question of eating while we are away from home. There is a place, it's on line 24B, for what the IRS calls deductible meals. So generally speaking, this can be any meal while you are in travel status, but it can also be meals around town when you're not in travel status that have some sort of business purpose. And I will say the general rule here is that any of those meals are only 50% deductible. It doesn't matter if there are 2 people at the meal or 25. The meal expense is 50% deductible simply because the IRS, or really Congress, doesn't want to incentivize you to have meals out for business purposes, unless it is part of pandemic relief legislation, which it was in 2021 and 2022. So as part of some of that pandemic relief, Congress passed legislation that allowed individuals and business owners to deduct 100% of their meals in 2021 and 2022, as long as they met certain requirements. They had to be in restaurants, for example, and there still had to be a business purpose. So know that there were some special rules around this recently, but going forward, your meals are still going to be 50% deductible. And I will also say there's a resource called gsa.gov that gives you the per diem rates for wherever you might be traveling all over the world. Those rates are often very helpful, and some folks would prefer to deduct the per diem rate instead of actual expenses for their meals. So either way is fine. I would choose whatever one is better for you, meaning whichever one gives you the bigger tax deduction. So here are some examples of what that looks like. If you're dining by yourself while you are in travel status, that is deductible, right? If you are at the airport, if you are at your destination, right? Those are all what we call individual meals while you are in travel status. If you have lunch with business contacts, whether you are traveling or at home and there is a business purpose, that feels deductible to me. If you meet your best friend from college at wherever sort of destination you are traveling to, and you are catching up for personal purposes, that is generally not deductible, right? Personal expenses are not deductible. Although, again, if there's a business purpose there, I could be convinced, but the default feels like if you're meeting your best friend while you're at an art event, that feels personal to me. And then lastly, if you're on this trip and then you get back home and you go straight to your studio and maybe you order food and you just want to keep working, that also doesn't feel deductible to me, right? It doesn't feel like there's a business purpose other than you just want to keep working. So in general, I would deduct these first 2, but probably not take a deduction for these bottom 2. And of course, if it's in 2023, that deduction is limited to 50% of the cost. Now, I do want to say here, right, let's pretend you go straight to work and you order some DoorDash, right? That can still be a business expense in your own record keeping system, right? You just would not deduct it for tax purposes. So that might feel a little bit like a distinction without a difference, right? But it is okay if you say, you know what, I regularly need to order food and I'm going to pay for it from my business account when I'm working. I'm okay with that. I just would not take a tax deduction for that because it doesn't feel tax deductible. I will pause here. Allison, do we have any questions about any of those things that have come up?
Yes, we do. Well, we have questions.
Yeah.
First is, If your kids work with you, are you allowed to use them as a deduction as an employee?
Yes, you are. That's a great, great question. Now, the kids have to be doing sort of legitimate work, right? So if your child is 2 years old or 3 years old, there's probably not a whole lot of things they could legitimately do. But you don't necessarily have to follow child labor laws if it's your own child. So if you have like a 9, 10, 11, 12, 13-year-old that might do some data entry or help you with events, yeah, you can absolutely pay your child, and then the wages would be deductible. And here's the other thing about that. I'm going to assume your child is your own dependent on your own tax return. And if that's the case, as long as your child's earned income is less than, I think it's $12,950 for 2022, your child doesn't have to file their own tax return, which is really nice. But they did have earned income. So you could put some, or maybe even all of that earned income into something like a Roth IRA. And then that would be a gift to your child in the future because you're saving for their retirement early. And that could be a really good opportunity to do some planning around that. So excellent, excellent question.
That's great. The next question is, how do you deduct for research?
Oh, good question. We're going to get to that, but there is an other category. And so you can define your own category of expenses in this other section. And that's where I would generally put research. It's helpful if the research is connected to like a body of work. It's also helpful if you can demonstrate that it is research as opposed to something that feels more like fun and aspirational. But you would document research would be your category, and then you would add up the expenses that go in there. What else?
That is it so far.
Oh, good, 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 good. Okay. So the people cost one connects really beautifully to hiring your own child, which is a tax planning strategy I love. But you might have other types of people you hire as well. So contract labor is something that I see come up kind of regularly or with a lot of frequency. These would be assistants you were hiring, maybe installers, maybe others you were hiring to do very specific things for you. In this case, you would collect a W-9 from whoever you are hiring as a contractor and then deduct anything you are paying them on line 11. This is sort of a couple of examples of when I see this come up. If you are a performing artist, especially a musician, and you perform with some other folks, often there is kind of one person who's like the responsible one in the group. So that person is usually the one that receives the money. In this example, it's $2,500 for a gig, and then they pay out the other band members. That main person is reporting $2,500 of income, and then they have contract labor where they are paying their bandmates $625 each in this example. And I will note as well, that's more than $600, which means this main person also has to send a 1099 to all those bandmates showing what they paid them during the year. So you definitely want to make sure you have a W-9 from them so that you can send out those 1099s at the end of the year. I may have said W-9 earlier. The W-9, you get their social security number, and then you use that to fill out and send them the 1099.
That may answer this
sorry.
question. Alexis asked, what's the difference between the W-9 and 1099 for contractors?
Great question. W-9 is what the person fills out when you hire them. And Alexis, you may have filled out some of these kind of in your life or in your experience. That's where you say your name, the name of your business, your address, and then your social security number or your business identification number. You give that form to whoever is paying you as a contractor. And then at the end of the year, if they have paid you more than $600, that company or that individual, if it's an individual running a business, will send you the 1099. And the 1099 would say, you know, the name of the bandmate in this example, and then it would say $625 is what that person was paid during the year. You're supposed to get all those by like January 31st. Sometimes companies sort of are slow to get them out, but a lot of folks wait on those to file their tax returns? Great question. Next example, maybe you hire some students to help you install a show. Same thing, this is contract labor. In this case, you would not have to send them a 1099. Technically, they should still be reporting the income, but you're still deducting the amount you pay them as an ordinary and necessary business expense. And you can even sort of hire friends. In this example, this person pays somebody who's a really good writer $75 to edit things she's filling out. So all of these feel like examples of payments that would be deductible as contract labor payments. You also might pay humans that are accountants or attorneys to review contracts for you, to help you with your taxes, maybe to do your sales tax filings if those are kind of annoying. So those types of payments would be deductible on line 17 as legal and professional services. And again, we just document the business purpose of the expense and then total up the amount and deduct it on line 17. So in addition to people, you might need some equipment for your business. In general, equipment you need is deductible, and it usually ends up on line 13 here. This is for what they call depreciation and Section 179 expense deduction. If you're buying a piece of equipment, most folks choose to deduct the entire cost of the equipment in the first year that they bought it. We call that a 179 election. And as long as the amount isn't substantially huge, you can usually do that. And most businesses like doing that because they've spent the money, they would like the tax deduction in that same year. So if you're buying a computer, maybe an amp or another piece of performance equipment, soundboard, tablet, Cintiq, instrument, right? All of those things feel like equipment you would purchase that would be deductible here on line 13. I will say so, though, if you are using a computer for some personal use and some business use, you want to make sure you are only deducting the portion that's used for business. And be especially careful about that if you have a W-2 job as well. Because let's pretend you're a graphic designer and you work for a graphic design firm, you are a W-2 employee, and they say, hey, why don't you get your own computer? They shouldn't, they should just give you a computer, but let's just pretend they ask you to get your own. Remember, with W-2 jobs, your expenses are not deductible. So if you are using your computer sometimes for your job, but then also for kind of freelance stuff you do on the side, it's only deductible for the freelance portion or the business portion of the use of that asset. So just pay attention to kind of how you're using the thing.
Elaine,
yeah, go ahead.
On that same topic, the question is renting equipment counted in this?
Yes, renting usually lives on its own line. Let me see if I have that here. Right here. It's on line 20. So maybe you are renting a piece of sort of performance gear or like a lift for a mural or something like that. Or maybe you're renting like a big van to drive to a festival and, bring your artwork or something. The renting expense would live over here on line 20. Either A, if it's vehicle, machinery, or equipment, or B, if it's another type of business property. So the rental expense lives on line 20, as opposed to these types of expenses that would live on line 13. Great question.
One more question. Do paid consultations fall under legal and professional services?
Ooh, great question. I would probably ask what type of consultation it is. So feel free to respond, but also, if it feels like somebody has like a license to do the thing, I would probably put it under legal and professional services. If it's more like maybe an expertise they have or a skill they have, but not necessarily like a state issued license, I'd probably put it under contract labor. That's just good.
It looks like, okay. Here's the answer. It was actually a consult with you over taxes last year.
Yes, I would put that under legal and professional services. Great question. Good question. Yeah. The reason I'm making that choice is that is a CPA type of consultation, right? So falls under legal and professional. Great clarification.
Yeah.
Thanks.
All right, that's it for now.
Nice. So on that equipment piece, right, you might also have to maintain the equipment. This probably wouldn't come up if it was renting something, right? But it would come up if you bought an instrument or, bought some sort of, maybe you bought a new computer and you paid for, extra Genius Bar support or something like that, right? Those types of repairs and maintenance would be deductible here as well. Same thing for like cleaning costs. Maybe you have a really like nice printer and you get it serviced every year and cleaned just so it keeps working, right? Those types of repairs and maintenance would go there. And then we already talked about rental expenses here. The one thing I will note here is even if you are renting your home, home office does not go under renting or leasing property, right? There's a separate line for business use of your home that we'll come back to in a second. So you might need some creative stuff. There's a line here for supplies. Generally speaking, my preference is to go ahead and deduct any supplies you have here on line 22 if you are able to track your inventory. So you are able to sort of identify individual pieces. Maybe you sell merchandise like t-shirts or albums, if you press some albums and sell them of your music or something. That's the sort of thing that I wouldn't put under supplies. I would deduct that under cost of goods sold, which is actually on line 4, because you can easily identify how many pieces are left in your inventory. I've also seen a lot of craft artists prefer to use cost of goods sold as well instead of supplies. I typically see photographers, printmakers, other types of visual artists use this supplies line, especially if it is hard or impractical to really identify every single material that goes into the work. So here are a couple of examples just to kind of help you lean one way or the other. This first one is someone that might only do commission work, so it's a little bit easier to identify the materials that go into each unique piece. This person says they're regularly buying a variety of materials, but they can estimate their inventory at the end of the year. This again often comes up in craft world, but it doesn't have to be. So if you can estimate your inventory, the IRS's preference is for you to use cost of sales or cost of goods sold. This person makes work, but their materials are too small to measure or count. Maybe they're a jewelry maker or a visual artist with, paint going everywhere and supplies everywhere, right? I would just deduct whatever new things you buy on that supplies line. And then this final example, maybe you purchase things and then sell them at a markup. This would be albums, maybe books you have written that you either have printed, or maybe you buy author copies and sell them at different events. Maybe t-shirts or prints, stickers, maybe you buy the thing and then you sell it at a markup. If you're buying the thing, usually it's easier to track how many you have. So we would use cost of goods sold in those particular examples.
Elaine, I'm going to interrupt you again.
Please.
How do you find out how much tax you are supposed to be collecting for art?
Good question. So I'm guessing the question is all about sales tax. So let's say you are selling a painting for $1,000. The person who's going to buy the painting from you is going to pay you $1,000, and then they're going to pay sales tax on top of that. In the state of Ohio, we have sales tax that is imposed at the county level. So you want to know kind of where you are. If you are based in one county, you would always collect at that county's sales tax rate. If you go around to different events, you would want to be a transient vendor, which means you have multiple different places where you sell work, and you would collect sales tax based on whatever that county rate is. So then you would collect the sales tax, and then you would send it into the state of Ohio. Tangible personal property includes certainly all artwork, all sort of materials you can touch that are sold. And in Ohio, it also includes sort of digital downloads as well. So depending on the type of work you do, you may or may not be subject to sales tax collections. But you would want to look at the county where you are based or where you are selling and use that as your sales tax rate. So hopefully that's helpful. Let's talk about your clothing. As a general rule, if you could wear a garment somewhere else, even if you never would, it is not deductible. But something like specialty shoes or costumes, be careful about costumes, right? Because if it's like kind of athleisure type of wear, that doesn't feel like a costume. That feels like something you could also wear to the grocery store, right? Any sort of safety gear is generally deductible. Generally, dry cleaning is deductible. You heard me mention a tuxedo or a suit earlier. If you have performance attire like that, it's probably not deductible to purchase the thing because you could wear it somewhere else, but dry cleaning it after gigs is generally deductible. And then I also have reference materials on here. So for example, let's say there was an illustrator I worked with years and years ago who was doing a whole series on Marie Antoinette. So they bought a whole lot of corsets online to use as reference material. Technically, that is attire or a garment, but they weren't wearing it. They were using it for reference, right? So all of a sudden, it's not a garment or attire, it is reference material. And those are the types of things that would go on this other expenses line. You'll see it has a whole lot of blank lines where you can define your own categories. So that's where I would put the types of attire that is deductible. But I will draw your attention to if you're buying a new garment to wear to an artist talk or to accept an award or to an opening, as a general rule, that is not deductible if you could wear the garment somewhere else. All of these other examples are things that you could not wear somewhere else. Special shoes that you only use on stage. Maybe you're a performer that has to have garments specially tailored so that you could perform appropriately. All of a sudden, it is not suitable for everyday wear. And now here's that research question that someone had brought up earlier, right? Research is another one of those categories that usually comes up in other because there's not a better place for any of these types of expenses. But this is certainly reference materials, maybe books you buy, admissions to go to different things. Maybe you really want to see how a gallery is installing something because you're going to work with them in the future. So you pay to attend that event. That's maybe a bad example because we don't usually pay to go to a gallery show, but maybe it's at a museum and you have to pay admission or something like that. Maybe you want to see a live performance because you have something coming up in that venue and you want to get a sense of the acoustics, or maybe you really want to see how a particular director works. These are all examples of research. And in every single one of those examples, I described what the business purpose was. It wasn't just, I want to see a show. It's, I want to see how the work is hung in this particular museum, or I want to see how the acoustics sound in this particular venue, right? There's a clear business purpose to that research. And you want to be careful with this, right? Because this is one of those categories that is really easy to abuse. So you want to make sure you are complying with kind of, the general intent of the law, which is that expenses that are ordinary and necessary and effectively connected to your trade or business are deductible. I would also make a point of documenting the business purpose of your research especially well. Here are some examples of what this looks like. The one here that feels like a big stretch to me is this last one. And this is based on a true story. I was working with a playwright, and they always dreamed of writing a play about the Yankees. And they had been season ticket holders for forever. And his question was, can I deduct my season tickets to the Yankees? Because maybe one day I'll write a play about them. I was like, no. But if someone commissions you to write a play about the Yankees, and you go maybe to 4 different games, and you sit in different places of the stadium, and you take notes, and maybe you record audio, and you take some reference photos, all of a sudden that starts to feel more legitimate, as opposed to, I really like the Yankees and one day I'd like to write a play about them, right? So that's kind of it's not a perfect test, but that's kind of the gut check we use on research. But you might also have some non-creative stuff, subscriptions, software, maybe Linktree, maybe Spotify, depending on your work, maybe some sort of streaming service, again, depending on your work. What we want to do is, again, be super clear on the business purpose of whatever these kind of non-creative software and subscription type of things are. And if there's personal use, the personal use is not deductible, but the business use could be deductible. So here, I think subscriptions to newspapers, maybe Grammarly, Zoom, Linktree for advertising purposes, softwares that you use in your work, all of those feel legitimate to me. And I think Spotify can feel legitimate. Certainly if you're a performing artist and you're using it to research repertoire, if your work is sort of multidisciplinary and you're incorporating music into your work some way, visual arts or sculptural kind of work type of way, I could see that being deductible. Maybe you use it mostly for podcasts and it's sort of an educational tool. I could see that. But we also know you're probably just enjoying it sometimes. So that personal use is probably the piece that is not deductible. Also, sometimes people will say, I do my best work when I listen to music. I'll be like, okay, that's not enough though, right? That's not enough to make it deductible. That's just kind of a personal preference. Educational costs are generally deductible as professional development, and that's another sort of category we define separately, right? So this would be classes you're going to, maybe support you are seeking out, continuing education type of things. The only thing that is not deductible as a business expense is education in pursuit of a degree. There are some tax benefits for that, but they're not business tax benefits, right? So any other type of education is generally deductible as long as it relates to the work you're doing, but not an extra degree you are getting in a field. Another thing that often comes up is donating work. If you are asked to donate your work, you can certainly say yes or no, but what you need to know is that it is only the cost of supplies that is deductible to you. In this first example, this person's cost of a visual arts piece was $175. They would have sold it for $1,000, but then the organization actually auctioned it for $1,800. In this case, the artist can only deduct $175 for the cost of supplies. So that is just often what happens. Just be aware of what the tax law says when you're deciding whether or not that makes sense for you. Similarly, if you're a performing artist, you cannot deduct the cost of your time, right? If you're asked to do a pro bono kind of event, you don't have supplies necessarily. You might have, transportation, parking, you might have some other costs that are deductible, but if you're doing a performance and not getting paid for it, there are no deductions for you on that. Business use of your home is a biggie, and this lives all by itself down on line 30. And what I'd love for you to know about business use of your home is that you are allowed to claim this deduction, but there are some very specific rules associated with it. So the place has to be your principal place of business, and you have to use the space exclusively and regularly for your business. And that exclusive test is usually the one that folks fail to meet. You also can't have any other place where you conduct administrative tasks. So in these examples, this first person has a separate room of their house and they only use it as a studio. It's about 100 square feet and the total home is 1,000 square feet. So 100 is 10% of 1,000. So this person would be able to deduct 10% of their rent or mortgage, 10% of their utilities, 10% of their Wi-Fi, maybe their insurance, right? All of those costs that go into the property, 10% of them is business use of their home. This second example, because this person uses the space for their W-2 job and also for their business, in general, that is no longer exclusive use of the space, which feels kind of harsh, but the IRS takes this exclusive use piece really seriously. So this person probably would not be able to claim business use of their home. Now, maybe they have a separate space, and if they're teaching remotely, that's happening somewhere else. But if they are working from home for their business, that is more like this first example. Okay, I could get more comfortable with that. And then this final example, that exclusive use piece, you can have a partner that exclusively uses some of the space and then you use exclusively some of the space, right? So we would just kind of adjust the math. So in this case, the two people share a home office. So each one deducts half of the space because it is exclusively used. Their half is exclusively used by them, right? And regularly for that business purpose. Allison, I will pause here. Are there other deductions or questions about deductions that have come up?
I have two questions. How would you break down square footage if you're in a shared building and you work out of an area of the basement?
Ooh, great question. First, I would measure the area of the basement, right? So, whatever it is, and then that would be my numerator, right? And then my denominator would then be, the total square footage of the space, including that basement. So that's how I would calculate it.
Another question, I'm just checking to see if Elle's got a follow-up to that one, but I'm going to skip to the other question is, if someone hires your company or small business for a service, what are we as the business responsible for filing tax-wise, or is that their responsibility to file the paperwork since they are the ones hiring?
No, if you are running the business, it's your responsibility to make sure you are sort of organized as a business and then to report all of the income and report all of the expenses. Now, if they're hiring you, and I'm assuming they're hiring you as a contractor, right? If they're hiring you as an employee, you are not running a business. They are running the business, right? But if you are running the business, they are hiring you as a contractor, they could get in trouble if they don't send you your 1099 at the end of the year, but it's still your responsibility to report the income that you earn from them because you're running a business and keeping those books and records. So even without the 1099, in theory, you would be able to identify kind of what that income was. In theory, we know sometimes it's more challenging than that.
Here's another question it kind of ties back to the baseball research. Artists, authors often make work based on their travels. How does it work if the whole trip is to garner information for future work?
So in that one, I think you have to be careful, right? Because the IRS is probably not going to believe that every single trip you took was work related, right? But let's pretend you are a well-known author and you are known for writing about different places, right? I think you're on much more solid ground. If this is your first publication, I probably would not be super aggressive. But if you've got some demonstrated history of those things that show you are running a business, right? You regularly conduct the activity, you are knowledgeable, you are keeping books and records, all of that strengthens your argument that this is legitimate research. The other thing I would do as well is I would somehow document the research. That might sound like kind of silly, right? But like, are you saving the photographs you take in a particular place that's different from like your family photographs that live somewhere else? Are you journaling? Are you sketching while you're abroad? Is there some sort of line that connects that research with a body of work you produce, whether it is written or performed or visual, right? Some sort of some sort of way to demonstrate, yeah, look, this research turned into this thing. But then I would also say, when we're talking about travel, the IRS's extra rule on travel is that the primary purpose of the trip has to be business related, right? So if it's a family vacation or you're visiting your best friend in a city you love, it's harder to say that the primary purpose of that trip is research, right? It feels like maybe you're just doing some research while you're doing something fun. So we look to sort of the legitimacy of the research and also if the primary purpose of the trip is business related. And then at that point, it's a judgment call.
Another question. I have a home office. I am a photographer and fashion designer. I do on-location photo shoots outside of home, but I do my sewing in an exclusive room. I also store cameras in the same room. Is this okay?
That feels okay to me, because the photography, sure, it could happen in a home studio, but that being on location doesn't feel like it violates the no other place to do administrative work. I think if you rented out a co-working space, that might feel a little different, but shooting on location feels totally fine to me.
Good. Any other questions, folks?
I love all of these that are coming in.
I know they've been really good.
Yeah.
I don't see anyone typing.
All right.
So
I'm going to keep talking then, but
good.
we know that we'll save at least a couple minutes at the end. So if you do have a question, right, don't stop sharing it. We'll get to it. There's a lot there, right? There's a lot going on with sort of knowing what's deductible and what's not deductible and all of that. So I want to kind of end by thinking about how you can kind of plan for taxes, right? If we're thinking about 2022, like the planning is done, right? Now we just kind of live with it. But if we're thinking forward to 2023, there are some things you can do to kind of prepare. So if you are relatively new in your journey as someone who's running a business, what I would lovingly and gently suggest is that anytime you are paid for something in your business, take 30% of what you are paid and set it aside for taxes. Not sales taxes, right? If you are living somewhere and you're collecting 7.65% in sales tax, that's different, right? That is going straight to the state of Ohio. But for the amount that you get to keep, not counting the sales tax, right? I would set aside 30% for taxes. And 30% might end up being more than you need, but that doesn't bother me because if you've got a little extra, throw it into an IRA. Maybe it becomes your retirement or your emergency fund, right? I don't mind you having a little bit too much saved for taxes. And if you are setting aside 30% of what you earn, you're more than covering your self-employment taxes, that 15.3%. And then after kind of your standard deduction and all of those other personal tax adjustments, your federal tax rate could be 12 to 22%-ish if you're making less than 86,000 or so. And you also might have Ohio and also City of Columbus taxes, right? So that's how we get to kind of 30% as an ish number. My hope is it is too much. If you live in a high tax jurisdiction though, like you move to California or something, 30% is going to be a solid number for you. The other thing you can do is if you have a W-2 job, When you started that W-2 job, you filled out something called a W-4, and that tells your employer how much you want them to withhold. Now, it may have been a while since you filled out that form, and so there's a new section on there. It's called Step 4. And Step 4 of your W-4, which is so confusing to say, I apologize, but on the W-4, Step 4 says, do you have other sources of income? So let's pretend you have a W-2 job. You can put in Step 4 of your W-4, hey, I think I'm going to make $10,000 from this side business I'm running. And your employer will say, cool, hopefully they'll high five you, and then they will adjust your tax withholdings to cover that extra income. Now, it may not be perfect, right? So you may have to kind of do some finagling or monitoring throughout the year, but that's also a really good way to set aside some money for your taxes. The IRS has something called a tax withholding estimator tool, and it's actually really good, right? It's a really good calculator. It takes a long time to use, though, because they ask you very specific questions. And they use those answers to get a really good estimate of your tax withholding to say if you have withheld too much or if you're going to owe taxes. But don't think this is like a 2-minute tool you can use, right? It's going to take you a while to go through and answer all the questions, but it's a really good tool if you want to sort of get a sense of where you are. After you've been doing this a while, you can pay more attention to your taxes. You can probably have a sense of kind of how much you actually end up owing each year. And you can maybe even look at line 24 of your federal tax return to see what your total taxes are. That's going to cover self-employment. It's going to cover your federal income taxes. And then you can do the same thing on your Ohio tax return and your City of Columbus tax return, or a different city if you live outside of the City of Columbus. So you can gather information to kind of give yourself a better estimate once you have some more experience. You can also, if you're working with a tax preparer or a CPA, you can definitely ask them to help you do some planning and estimate what you might need. So if you say, I don't want to do any extra math, 30% sounds fine, you'll probably be okay. If you're earning more than $100,000, we should talk though, because 30% might not work for you at higher income levels. So, at that point, you definitely want to be kind of getting into the weeds a little bit, right? But if you look at your own kind of numbers, you might say, you know what, Elaine? 23% is my number. And I'll say, awesome, set aside 23% then, right? And do your planning based on that. So that's what I would kind of love to leave you with. There are supportive options out there. We did a lot to talk about kind of the overall tax landscape. We talked a lot about different deductions that come up for creative folks. And way back 90 minutes ago, we talked about record keeping systems and keeping those books and records so that you can demonstrate you are approaching the activity professionally and keeping track of everything you need to keep track of. So I will go ahead and end with gratitude to GCAC for facilitating these conversations and to all of you for being here and asking such wonderful questions. And I will go ahead and pause here to see if there are other questions we can answer in this final 5 minutes.
Yes, of course. Speed round. If I earned $1,200 in July and did not realize I needed to file self-employment taxes, what's the best way to proceed now? I thought total deductions for the year were at play.
Totally fine. So your self-employment taxes just come up in your regular tax return, right? So if you earned $1,200 when you fill out your Form 1040, if you're using, TurboTax or, Tax Act or Free Tax USA, any of those options, as you go through all of the answers, it'll say, did you have business income? And you will say, yes, $1,200. Awesome, right? Then it'll say, did you have business expenses? And maybe you say, no, I just made money, right? Great. It'll just then prompt you to calculate that self-employment tax as you're filling out your tax return. Now, 15%, 15.3% of 1,200 is not a small number. So you may end up owing a little bit, right? Which is unpleasant, but it'll just come up in your normal tax return process. If, going forward, you're earning kind of more than that, especially if you're starting to earn like $20,000, $30,000, $40,000 in your business, at that point, we'd probably look at filing those self-employment taxes quarterly. That's when you're kind of guessing what your taxes are going to be for the year, and then you're dividing that number by 4 and then sending it into the IRS in April, June, September, and then the following January. Very rarely do people have to do that the first year or two. Usually you only do that after you end up owing more than $1,000 in taxes. And that's when your CPA or your preparer or your software, if you're using TurboTax or Free Tax USA, will say, hey, time to file self-employment taxes. And then they'll actually do the paperwork for you. So all you have to do is just go online at those 4 dates and then type in the amount that they tell you to pay.
That's great. And Tommy, that just answered the question that you had submitted. Alexis has, do you have any recommendations for artists who want to hire a third party to file our taxes for us?
I do. So if you are looking just for someone to file your tax returns, right, you have a couple of options. My favorite company that does this for creative folks is called Brass Taxes. I'll drop that in the chat, so in case you want to see the name. But they are an all online tax prep firm. The owner is based in St. Louis, but they have preparers all across the country, so they can cover all the states and all the territories. And I have found their rates to be really, really accessible. So that is a really good option if you are just looking for someone to file. Now, they don't do a lot of planning. So if you're looking for someone to like sit down with you, maybe help with your books, or maybe, say, hey, have you ever thought about retirement savings? Here's what that might look like. If you're looking for someone to do more planning, then you probably want to be working with a CPA who will kind of take the time to kind of get to know you. I have a couple of folks locally that I love kind of referring to. Depending on kind of where you are in your career, I can maybe point you to a good person that might be well aligned with you. Or if someone really loves their CPA, drop their name and contact information if you can in the chat, so that we can sort of crowdsource this a little bit. Generally speaking, you want someone who will meet you where you are, right? Who you feel comfortable asking questions of. You'd also want someone who does do some work with creatives or freelancers or even just kind of non-standard businesses. You probably don't want someone that only does like super traditional taxes, because there are a lot of nuances in the arts. So you want to make sure somebody's comfortable with that.
Yeah, Maddie asked, would that be good for someone who does mostly independent contractor work related to my art, as well as selling my work on the side, as opposed to someone who just makes income off their art?
Yeah, I think so, Maddie. And it, depending on if that's all kind of one business, right? I think you could do a brass taxes, you could do sort of a regular CPA, that would be totally fine. If it feels like those are multiple businesses, you might want someone who's working a little bit more closely just to help you kind of divide up, what different types of businesses you're running. But it absolutely could be the same type of creative business. You just do different things within it. The other thing I will point out, the IRS has a volunteer income tax assistance program. It's called VITA, for volunteer income tax assistance. So if your income is less than $58,000 a year, I think is the cutoff right now, you can have your taxes prepared by a volunteer, meaning you do not have to pay that person. These are lovely humans. They tend to hang out at libraries. They've got a bunch of locations around Columbus. So that could be an option. They can also file your Schedule C. You have to bring them all the information, and they can't give you any tax advice, but that could be a good option as well, if hiring someone isn't necessarily in the cards for you right now.
Well, that's terrific. We are at our time and no more questions. So Elaine, you rocked this. Plus, they're about to run the vacuum cleaner here at our office.
It's time to wrap up.
It's time to wrap it up. Thank you so much for your energy and your expertise, your knowledge. I appreciate everybody asking all the really great questions. This is the importance of showing up for workshops, because you get to get personalized questions or answers to your questions, which is so important. So thank you again. And I will follow up with everyone who had signed up for this, but we'll also be posting this video on our website and our YouTube page. So thank you, everybody. Appreciate you all. And